Let's get behind those headlines. Who better to do it with than Hong Kong Exchanges and Clearing Chief Executive Charles Li. So yeah, pretty good stuff.
Yeah, very happy. Obviously, you always want it to be better. I think, investment income, has been a good surprise upside, and, overall sentiment improved.
You say you always want to be better, so what do you want to improve?
Well, you always want to, and the singular driver of our growth is really in turnovers, market trading turnovers, the more the better.
Now, so how do you do that, though? And one of the ways is through Connect. We saw turnover there increase, but it's nowhere near reached its potential yet.
Well, yeah, I think, very early stage. The key is really connect those two big markets. I mean, Hong Kong, in many, many ways, is a connector. We don't really have a very large home market of our own. And we're really trying to bring international money, Chinese issuers, into future Chinese money, international issuers. So it's really a common market where two forces congregate, and hopefully we are in the middle who are able to convert, translate, or connect, whatever people need to be. Essentially, two very big systems need to be able to speak to each other, need to be able to convert. So once you build those bridges, traffic will only grow, but obviously we always want the traffic to reach capacity right away, and then we can build another bridge. Just going to take time. China is going to move 3 steps forward, probably occasionally 2 steps backward, and they're going to be back up again.
Charles, just passing through the earnings, derivatives revenue, I should say, that's a key growth area for HKEX. That was down 22% in the first 6 months. We had, a 25% decline in average daily trading. What was behind that, and does that worry you?
No, I think, the cash trading and derivative trading tend to not to always be together. Derivative trading obviously have a lot to do with volatility. And I think the last quarter, the volatility has not been as strong as it used to be. And I think that's one of the key reasons why our derivative volume was a little bit down. But I think if you look at the historical, patterns, we actually are now normalizing at a reasonably good level, even with volatility at a lower level, when in the past, corresponding with that low level of volatility, actually our derivative was a lot lower before. So we're very happy to normalizing at that level. But indeed, they reflect largely volatility issues.
What's the prospect for more connects? Because we know a lot of it depends on what happens on the mainland. But you've spoken in the past, and you've got a stock connect, a bond connect as well. You've also spoken about an ETF connect, a derivatives connect, a primary connect as well. Where are you at with all of these different, still developing projects? And can we expect to see them come to fruition anytime soon?
I think the key connect is really stock connect itself. That's pretty much done, and then a bond connect. With this two connect, the next program is more about adding more content onto the connect, or trying to change and improve some of the access challenges and issues. It's almost like improve your lighting, improve your signs, improving your ramps and everything else, so that it's easier for people to get onto the connect and allow the traffic to flow a lot faster. But primary connect is a very new bridge. That bridge essentially is fundamentally different from the current connect, which is essentially secondary connect. People have to be listed here in order for Chinese to buy, and you have to be listed in China for international investor to buy. Primary connect is essentially about a listing here that are able to sell primarily in primary shares into Chinese hands. That's really the next big thing. That will take a while.
Very quickly, Charles, have you righted the ship of your purchase in London, the London Metal Exchange, the LME?
Yeah, we had a few tough quarters, largely to do with both the industry challenges and also our own way of managing the exchange. But I think we have engaged in industry very deeply in the recent discussion paper, and we are very close to publishing a conclusion. And this is essentially like a consultation. So and this is the most comprehensive engagement with the industry. We're turning the corner. Okay, let's have a look at the strategy ahead. Now, a lot of pressures on you to have a dual class of shares, dual structure. This is one of the reasons Alibaba did not list in Hong Kong. Are you getting there? Well, we have this consultation going right now. It will close on the 18th of August. So we're pretty close in finishing up that consultation. We're going to look at the review. We're going to come out and make a conclusion on that based on that feedback. If there's a broader support for us to proceed, we'll proceed. If not, we may not proceed. That's really basically is the purpose of the consultation. But I do think the market has moved on from where we were a few years ago. And this is the issue that has a very large diversity of views. And, some people love it, think we have to have it. Other people saying over my dead body. So we just have to find that nice middle ground.
Certainly, Alibaba, one of the reasons it didn't decide to list here was because of the lack of this structure here. Now, other companies may want to also, and they've been put off. Are you still talking to Saudi Aramco?
Well, yeah, Saudi Aramco is a totally different issue. It has nothing to do with weighted voting rights, because even if they do a listing, they will be only offering 5% at most, because it's a massive company. But the issue there is different. For Saudi Aramco to consider listing in Hong Kong, just a pure Hong Kong listing probably is not that particularly compelling. But being able to list in Hong Kong but selling shares into Chinese major institutions through Connect, that's what we call primary connect. So Saudi Aramco will be a perfect catalyst for primary connect. And also primary connect is probably the best way for China to receive and be able to invest in Saudi Aramco.
So is it going to happen?
Well, I don't really know. This is not something you can only try. Yeah, I'm always an optimistic guy. So I hope it will happen.
Yeah, I mean, you've got to get that done in terms of the dual listing structure to get that done before Ant Financial comes online, right? I mean, you've lost Alibaba. It would be a pretty big blow if you lost the crown jewel for Ant Financial as well.
Well, I think this is the thing. Obviously, there are large companies that would be great target for us to attract. But this is not really for anything specific. Even when you talk about Ant Financing, I don't actually think Ant Financing itself is a weighted voting rights structure. It's a regular company. But the issue is really, what do we do with our market? Do we want to add the optionality? We're not talking about wanting everybody to do this or allowing everybody to do it. We're simply saying that it makes sense for a specific sector, and in a sense that we provide the optionality. Investors don't like it. They don't need to buy those companies. But on the other hand, if companies truly need it and they want to list here, we want to give them that ability to do so here.
Charles, what about the prospect of this new board for new economy for early stage companies? Why launch this board? And I guess what would be the appeal of companies listing on this board as opposed to the GEM or elsewhere around the world?
Well, I think the new economy company, many of the new economy startups, and the real key here is really whether or not we allow companies meaningfully long before profit. They have a good operating track record, but they just have not had the profit. For example, if you're a drug, you have a great innovation, you have a big drug that is going through clinical testing or approval processes, and it's probably worth a lot of money over time, but it's not something that is currently on sales. So those are the companies, the new tech companies, the new economy companies that are not yet profit in track record. We wanted to find a way to see whether our market will be a home for them.
Charles, only got a very little time left. What about consolidation in the industry as a whole? Is it going to happen?
Well,
seen bits of it, of course.
Yeah, I mean, this is not something that is in our DNA for us to go out and do. We're not acquisitive, but on the other hand, if there are opportunities that match our strategic fit, we will look at them. But in terms of the broader landscape, with the big deals that have felt, falling apart, I don't really know whether there will be very big deals coming up anytime soon.
Well, certainly one deal was Deutsche Börse and London Stock Exchange, and you're definitely not buying the LSE.
Well, we're not a buyer.
Okay, you're not going to merge with the London Stock Exchange.
You never say never, but this is not something that I think about.